Welcome to Investomania, brother. Boom! We have breaking news as the New York Times report Facebook is hit with a data breach that affected 50 million users. Wait a minute. Didn't that just happen? I mean, am I seeing double vision? Is this deja vu? Oh, wait, that was the Cambridge Analytica breach and ended up being 87 million, not 50 million. This New York Times report is a whole new data breach affecting 50 million users. The stock is down a tad over 3% today, including after hours. Facebook CEO Mark Zuckerberg stated they were able to resolve the security vulnerability, and this is why it is important to continue investing in security. That's what he said. So, what happens from here? Well, fortunately, we have a decent little roadmap since this whole thing just happened. Stockholders will sell off the bad news. Tick that one off. We got a nice little sell-off today. Then what? Testify in front of Congress? Well, the nature of this breach, at least as we understand it now, is a little bit different, so probably not that. But we are going to see continued increase in the spending for improved security. That, in turn, is going to strain gross margins, which in turn will cause the stock likely to continue to fall. And then, after that, we have another data breach. And then we repeat steps 1 through 3. Now, back in March, when the Cambridge Analytica breach story broke, the stock dropped 6.8%. Now, that was over a weekend, so there was more time for the news to travel. A little bit different than today. But this may tell us that the stock market may not react quite as negatively because, of course, it was 6.8% last time. This time, we are at about 3%. So it's certainly quite a bit less. However, the stock started already down 9% from where it was when the Cambridge Analytica breach was reported. The stock is currently sitting at $163.70 after hours. I would expect the stock to continue to trade down into the low to mid 150s, which is where it traded down to after the Cambridge Analytica breach before rebounding. That's roughly an additional 6% down from here. It took about 2 weeks for the stock to bottom after the Cambridge Analytica data breach. If this were a stock I wanted to get into, and I don't particularly want to get into it, that low to mid 150s is probably the area I would start looking, depending upon, of course, the information that comes out over the next week or two. That, of course, may change the situation. But with the information we have now, that's probably where I would start looking. Having said that, while I think the downside may be somewhat contained, the reason I'm not particularly interested, at least with the information we have thus far, is I would be hard-pressed to buy at that level due to investor sentiment. Facebook has just had problem after problem after problem, at least, this past kind of year or so. And that's going to affect new buyers' willingness to jump in. It wouldn't surprise me to see sideways trading for the next 1 or 2 quarters. Now, after that, I think long-term, it's still a good play. I think that there's still growth to be had in the Facebook stock. Not the same types of growth that we were seeing in years past, but I still think it's a good story. But over the next 1 to 2 quarters, I don't anticipate those looking too good, and I don't, that's mostly due to the increased security spend. I think that will keep buyers away. So while I see a somewhat limited downside with the currently available information, I don't see the upside drivers that previously would have continued to push that stock higher. Facebook appears to be transitioning from a stock full of growth investors to a stock full of value investors. But that's a transition that takes time. And generally, new value investors aren't going to be trying to cram into a name that's having major issues and subpar quarters. Growth investors will forgive a lot as long as your numbers are still good. But when the numbers aren't good and you've got a whole bunch of these data breaches happening, the value investors are going to be they're going to be coming in a little bit slower. So that's why I don't really have a reason to recommend this stock, at least for the next quarter or two. Of course, things can always change, but for the time being, I just wouldn't recommend being in it.
That's the bottom line, because Stone Cold said so.